What consistently ranks as one of the top career opportunities in business? What frequently rates among the most popular majors on campus? Accounting. Point 1. Why do people choose accounting? They want to acquire the skills needed to understand what is happening financially inside a company. Accounting is the financial information system that provides these insights. In short, to understand an organization of any type, you have to know the numbers. Accounting consists of 3 basic activities. It identifies records and communicates the economic events of an organization to interested users. Let's take a closer look at these 3 activities. 3 activities. As a starting point to the accounting process, a company identifies the economic events relevant to its business. Examples of economic events are the sale of food and snacks by Unilever, GBR and NLD, the providing of telephone services by Chunghwa Telecom, TWN, and the manufacture of motor vehicles by Tata Motors, IND. Once a company like Unilever identifies economic events, it records those events in order to provide a history of its financial activities. Recording consists of keeping a systematic, chronological diary of events, measured in monetary units. In recording, Unilever also classifies and summarizes economic events. Finally, Unilever communicates the collected information to interested users by means of accounting reports. The most common of these reports are called financial statements. To make the reported financial information meaningful, Unilever reports the recorded data in a standardized way. It accumulates information resulting from similar transactions. The entire process of identifying, recording, and communicating economic events. 2. Who uses accounting data? The specified financial information that a user needs depends upon the kinds of decisions the user makes. There are 2 broad groups of users of financial information: internal users and external users. Internal users of accounting information are managers who plan, organize, and run the business. These include marketing managers, production supervisors, finance directors, and company officers. In running a business, internal users must answer many important questions, as shown in illustration 1-2. Learning objective 2. External users are individuals and organizations outside a company who want financial information about the company. The 2 most common types of external users are investors and creditors. Investors, owners, use accounting information to make decisions to buy, hold, or sell ownership shares of a company. Creditors, such as suppliers and bankers, use accounting information to evaluate the risks of granting credit or lending money. Accounting standards. In order to ensure high-quality financial reporting, accountants present financial statements in conformity with accounting standards that are issued by standard-setting bodies. Presently, there are 2 primary accounting standard-setting bodies: the International Accounting Standards Board, IASB, and the Financial Accounting Standards Board, FASB. More than 130 countries follow standards referred to as International Financial Reporting Standards, IFRS. IFRSs are determined by the IASB. The IASB is headquartered in London, with its 15 board members drawn from around the world. Most companies in the United States follow standards issued by the FASB, referred to as Generally Accepted Accounting Principles, GAAP. As markets become more global, it is often desirable to compare the results of companies from different countries that report using different accounting standards. In order to increase comparability, in recent years the two standard setting bodies made efforts to reduce the differences between IFRS and US GAAP. This process is referred to as convergence. Because convergence is such an important issue, we provide at the end of each chapter a section called A Look at US GAAP, to provide a comparison with IFRS. Measurement principles. IFRS generally uses one of two measurement principles, the historical cost principle or the fair value principle. Selection of which principle to follow generally relates to trade-offs between relevance and faithful representation. Relevance means that financial information is capable of making a difference in a decision. Faithful representation means that the numbers and descriptions match what really existed or happened, they are factual. Historical cost principle. The historical cost principle, or cost principle, dictates that companies record assets at their cost. This is true that can be expressed in money terms. This assumption enables accounting to quantify, measure, economic events. The monetary unit assumption is vital to applying the historical cost principle. This assumption prevents the inclusion of some relevant information in the accounting records. An economic entity can be any organization or unit in society. 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 Assumptions. Assumption. There is no legal distinction between the business as an economic 10.1 economic entity assumption. An economic entity can be any organization or unit in society. It may be a company, Telefonica, ESP, a governmental unit, the city-state of Singapore, a municipality, Toronto, Canada, a school district, St. Louis District 48, or a church, Baptist. The economic entity assumption requires that the activities of the entity be kept separate and distinct from the activities of its owner and all other economic entities. To illustrate, Sally Ryder, owner of Sally's Boutique, must keep her personal living costs separate from the expenses of the boutique. Similarly, Metro, Dew, and Coca-Cola, USA, are segregated into separate economic entities for accounting purposes.